Thanks for joining me on my market report. My name is Mike, and my market report is on mortgage rates. We get into explaining what is driving mortgage rates on a daily basis. Sometimes it could come from economic calendar, sometimes it could from headline news, sometimes it's geopolitical, or a combination, a mixture of those. Um, but also sometimes we get good news is now bad news, so market sentiment changes and nobody knows why. Well, we try to give those explanations out there so that way hopefully it makes sense for you. And if you're looking to refinance or buy a home and are kind of following mortgage rates, hopefully this will give you the information you're seeking to help you make an informed decision whether to lock in or float or however you want to proceed. But a little bit about myself is I'm a loan officer. I do work with a national lender. We do loans in all 50 states. We'd love to be able to help you out with your refinance or purchase needs. But not only that, we want to be a resource for you folks. So if you guys want to reach out and have questions in regards to mortgage rates or programs or whatnot, please feel free to reach out. We'd love to be able to talk to you a little bit about. We love to talk about this stuff, and we're here to help you guys out. So without further ado, we'll jump right into it. We'll start off with economic calendar. I'm going to go to a slightly different economic calendar than the one I usually do here because it has a little bit more information on it. So we're going to go over here. We'll start off with the big one this week, and that was the PCE, or Personal Consumption Expenditure. This is important because this is the Fed's favorite gauge for inflation, and this is on the consumer side of things. So the headline news went up month over month. The previous month in December, was up 0.4%, but in January it went up 0.6%. So that brought its year over year to, let's take a look here because it's kind of mixed up around here, from 5.8% to 6.1%. Now, when you strip out food and energy, we get what they call the core PCE, and this is also what they call, in other words, is also real inflation because that's what the Fed actually looks at. They don't look at the headline; they look at the core PCE here. So its month over month went from 0.5% in December with a forecast 0.5% and came in at expectation 0.5%. So its year over year went from let's take a look here over here, right here. Okay, went from 4.9% to 5.2%, but it had an expectation of 5.1%. So it exceeded the expectations and it came a little bit high here. Now we also got consumer spending, consumption here. Uh, Back in December, it dropped 1%. However, in January, it increased to 1.5% here. Now, on the other hand, we got the personal income. So in December, it rose 0.3%. However, forecasts come for a drop of 0.3% in January. It just remained unchanged here. Now, we also got another big one here, which is durable goods. Back in December, it dropped to 0.7%. Forecasters come for 0.8%, and it really came in hotter at 1.6%. Now, if you take out transportation, which can those are carry big numbers, and it can skew the numbers to one direction. So this is why we kind of look at this one as well. Back in December, it went up 0.6%. Forecast come for 0.4%, and it came in at 0.7%. So you can see the difference between 0.6 and 1 or 0.7 here. So how much of the big numbers come in. A lot of that has to be like orders for airplanes and stuff. Now, lastly, we got the consumer sent. Oh no, actually, we got two items. Excuse me. We got pending home sales for the month of January. So December it dropped 3.8%. Forecast is calling for 1%, and it dropped another 5.7% in January. And then consumer sentiment went up, went from 61.7 in January. Forecast come for it remain unchanged, and it went slightly up to 62.8. And that's it. So let's go back to here. Take a look at rates, see what mortgage rates are doing. We started off lower today. A lot of this, again, we're drawing our news from what's going on right now. Two things, really. The big one, actually, right went to center stage is the Ukraine and Russia situation with the invasion of Russia. Now, today, reports coming out that Russia's reaching out for diplomatic talks, see if perhaps they can de-escalate and hopefully come to some type of resolution and agreement in there and start pulling back a little bit and de-escalating the. So there's a little optimism in the markets right now based on some maybe a hand being reached out here. So hopefully things can work out for both parties here, so we can get back to safety. So we didn't start off lower. We did go upwards a little bit, and so we got to about unchanged levels at one point. However, just a few more moments, it's kind of subsided a little bit further. Why is that? Well, the stock market. A lot of the money over the last few days were going upwards from going from the stock market into the bond market. Now, kind of going back into the equities. So they kind of, for the most part, they buy on the dip, but there's also some optimism brewing that perhaps things can be worked out between Ukraine and Russia as a hand's being reached out. So hopefully some diplomacy will be found there. Again, and then the second part was we're talking about is the Fed. There's still a lot of uncertainty with the new development with Ukraine and Russia. Some were hoping that perhaps the Fed might delay their rate hikes. However, it doesn't seem like that could be the case. Now, the main thing is the uncertainty lies with how much of a rate hike. Are they going to do a 0.5%? Or are they going to do a 0.25% at this coming meeting here? And that seems to be where the uncertainty lies and where investors kind of feel a little bit skittish about. So, and then as I indicated, there's been a little volatile. So we started off way down here. We jumped up, and since then we've been kind of starting to pull back a little bit here over the last 1 or 2 hours here. All right, so let's take a look here at the treasuries and treasuries. Just at 1.99 right now. It did touch up earlier, actually at 2%. It was at 2% exactly, and it pulled back a little bit. So right now we're at 1.99, and it has come up a bit from where we left off yesterday. So yesterday it jumped right back. We did close. We were below the 25-day moving average and shot right past through a technical floor ceiling, and then almost went through another technical ceiling here, but kind of got held up there at the approximately 2% mark there, this technical level. All right, so that's pretty much kind of wrapping things up, but we'll look at one last thing here, and that is the average rate on a conforming loan limit with these do have points built into it. We'll start off with the 30-year fix, which is now at 4.17, and then we'll also look at the 15-year, which is at 3.42. Again, these got points in, so that's why it doesn't look like a normal rate they get quoted, because we usually typically quote in eighth increments on there. And hopefully this will give you the information you're looking for. If you find these videos useful, please help us out and smash that like button and share. We greatly appreciate it. If again you guys got questions, please reach out. Otherwise, you guys have a great rest of your weekend, or great weekend and rest of your day here. Thank you so much for watching, and see you guys on Monday. Take care. Bye-bye.